Hello, so now we will move on to the last part of our consolidation topic, which is consolidation with intercompany transactions. So we will discuss elimination of intercompany transactions involving sales of inventories and fixed assets. First, for the sale of inventories, intercompany sale of inventory. So ano ba yung nature ng transaction na to? So it is either one of the two Yung first scenario, si parent, nagbenta siya kay subsidiary. Na si subsidiary, ibebenta niya to the external customers. Ang tawag dyan, downstream sales. The other scenario is when the subsidiary sold inventories to the parent company. Tapos si parent naman yung magbebenta sa external customers. Ang tawag naman dyan is upstream sales. Now, in this transaction, ang sabi ni PFRS 10, dapat daw the group should eliminate in full all intragroup assets, liab, equity, income, expenses, cash flows. In short, lahat, pag sinabi mo kasing intercompany transactions or pag nagko-consolidate ka, dapat tinatanggal mo yung transactions between those companies under the group. Kasi, ang point of view mo nga sa kanila sa group is one company na lang sila in substance. Okay? In legal form, madaming companies, pero in substance, iisa na lang sila. So, dapat pag nagbenta ka from one company to another intercompany, dapat hindi sale ang treatment mo pagdating sa consolidation. So, dapat matanggal yun. I-eliminate natin sila. Ang pinagkaiba, kaya dinidistinguish mo yung downstream saka upstream sale is, pagdating mo sa upstream sales, since si subsidiary yung nagbenta kay parent, dapat yung ine-eliminate mo na profit doon, may share si non-controlling interest kasi si subsidiary yung seller. So, kung sino yung seller, siya yung tatanggalan mo ng profit. And of course, since si subsidiary, may owner siya na ibang party, which is the NCI. So, dapat magkaroon siya ng share dun sa tinatanggal mong profit. We will discuss that in detail here. So, sample, intercompany sales and cost of sales. So, si parent, kunwari, nagbenta siya kay subsidiary. Ang selling price ni parent papunta kay subsidiary is 100. So, entry mo, debit cash, credit sales to subsidiary, which is 100. And then, cost of sales, kunwari yung binili ni parent yan from external suppliers at the cost of 75. So, another entry will be debit cost of sales, credit inventory at its cost, which is 75. Pagdating naman kay subsidiary, ang entry niya, syempre, meron siyang debit inventory kasi bumili siya or purchases. Debit inventory or purchases amounting to kung magkano niya binili kay parent, which is 100. Credit cash, 100. And then, kapag binenta na niya to external customers, ang entry naman ni subsidiary is debit cash, credit sales to the external customers na, syempre, usually may another additional markup si subsidiary dyan. So, parang ang nangyari, si parent, binila niya yun at 75. Binenta niya kay subsidiary at 100. Si subsidiary, binenta niya to external customers at 125. So, pag kasi nag-consolidate ka, tatanggalin mo lahat ng mga intercompany transactions, ng transactions between parent and subsidiary. Matitira dapat yung external transactions mo. May additional entry pa pala sa subsidiary which is debit cost of sales, credit inventory, which is the cost purchased from the parent company. So, tuloy natin. At consolidation, dapat matanggal lahat ng pag-itan kay parent at subsidiary. So, tanggalin mo dapat yung cash, inventory. Tapos, ang matitira, yung sa point of view ni parent, yung purchase price niya from the external suppliers or kung manufactured ito, kung magkano yung cost nung kung magkano yung manufacturing cost nung binenta niya to subsidiary, which is 75. So, yung may bilog, yun yung matitira. Sa point of view naman ni subsidiary, dapat ang matira, yung benta niya to external suppliers. Kaya, tatanggalin natin yung bentahan nilang dalawa between them. So, ito yung sales ni parent to subsidiary na 100. Saka yung cost of sales naman ni subsidiary galing kay parent na 100. Yun yung natira. So, the only eliminating entry, assuming na benta mo din within the year, yung inventories is yung debit sales ni parent to subsidiary and credit cost of sales ni subsidiary from the parent, which is 100. That's it. What if ang scenario naman, unsold siya at year-end? So, yung entrada ni subsidiary na debit cash, credit sales, debit cost of sales, credit inventory kanina. Wala kasi unsold nga siya eh. So if unsold siya at year-end, ang eliminating entry mo dyan is, dapat pa rin matanggal mo yung sales. Okay, ni parent papunta kay subsidiary. Pero ang cost of sales lang na matatanggal, yung cost of sales lang ni parent na 75. Kasi meron kang unrealized profit on ending inventory. Bakit siya unrealized profit? Kasi ito yung profit ni parent papunta kay subsidiary, di ba? Na 25. That's 100 less 75. Pero, at since ni-recognize na siya sa libro ni parent as profit, pero sa libro ni subsidiary, hindi pa siya profit kasi hindi pa siya nabebenta to external customer. Pagdating mo sa point of view ng consolidation, yun bang inventories na yun, nag-recognize ka within the group, di ba? Kasi si parent nag-recognize siya ng profit. Pero sa point of view ni consolidation, dapat unrealized yun. That's why, tanggalin mo siya, credit inventory 25. Reduction in ending inventory is reduction is additional cost of sales, reduction in net income. So, if it's unsold at year-end, meron kang pabawas sa income mo na unrealized profit on ending inventory. Tapos, the following year, ang assumption natin, same inventories were already sold the following year. So, kapag nabenta mo siya the following year, ang entry mo magiging debit inventory credit cost of sales corresponding to the unrealized profit last year. So again, yung unrealized profit mo last year will be realized profit the following year. And it will affect cost of sales. It will affect net income. Okay, so solve naman tayo ng problems. First is for the upstream sales. Dito sa problem na to, mapapansin mo, yung seller mo, si S Company, nagbebenta siya kay P. And si S Company is the subsidiary, P Company, or P Corporation rather, is the parent company. So upstream, kasi from subsidiary to parent. Okay, pag nakita mo din, 2017 nung nag-start silang magbentahan. Tapos at each year-end, 2017 and 2018, may natitirang inventaryo. So, it's indicative na meron kang pareho unrealized profit on ending inventory as well as the realized profit on beginning inventory. Compute natin ha. First is the unrealized profit in ending inventory. Compute the sales. And sabi nga, during 2018, S sales to P amounted to 90,000, costing 63,000, so your gross profit is 27,000. GP rate in 2018 is computed as 27 over 90 or 30%. Your unrealized profit in ending inventory is 90,000 times ilan yung natira na inventaryo? 1/2 times 30% is 13,500. Next, your realized profit in beginning inventory. Magkano yung natira from last year na malamang, inassume mo lang, na benta this year. So, dapat realize na siya. So, sabi, during 2017, S sold inventory to P for 80,000, costing 50,000. So, your gross profit in 2017 is 30,000. Your GP rate is computed as 30 over 80 equals 37.5%. Okay. Pwede kasing hindi consistent yung GP rates na ginagamit mo year on year. So, kapag meron kang unrealized profit on ending inventory when you are computing for it, dapat ang computing mong gross profit is the gross based from the gross profit rate for the current year. Tapos, kapag realized profit in beginning inventory naman, since last year yan binili ni parent from subsidiary. Dapat ang kukunin mong GP rate ni subsidiary is from the last year then. Again, the unrealized profit in ending inventory based on GP rate for this year. The realized profit in beginning inventory will be based from GP rate from last year. So that is 37.5%. Your realized profit on beginning inventory is computed as 80,000 times ilan yung hindi nabenta last year na inassume mo na nabenta this year, that's 1/4 times 37.5. So your realized profit in beginning inventory is 7,500. Let's now compute for the consolidated net income attributable to parent in 2018. So first, we'll start from the net income. Given naman yan for 92,000 for P Corporation and 150,000 for S Company. Less the dividend income ni parent, 112,000 of course. minus the unrealized profit in ending inventory. Ima-minus mo siya dun sa column sa kung sino yung seller. Since upstream to, ang nagbenta si S, nagbenta siya papunta kay P company. So, magkano yung unrealized profit in ending inventory? Pabawas. Kasi nga unrealized siya. So, na-recognize na siyang profit ni S company. Pero sa conso, since hindi pa siya nabebenta sa external customers, dapat ibawas mo siya. Plus, the realized profit in beginning inventory, binawas mo to last year eh. Add mo this year kasi inassume mo na benta mo siya this year. So, your consolidated net income is computed as 380 from P Corp and 144 from S Company. Total of 524. Ang pinapakompute ni problem is the consolidated net income attributable to parent computed as 380,000 yung buong parent plus 80% owned mo si subsidiary. So, 80% nung computed mo sa column nyo, which is 144,000. That will be 495,200. What if downstream naman? Pag napansin mo, ang nabago lang dito, kanina kasi ang nagbebenta si S, papunta kay P. Dito naman sa problem na to, si P nagbebenta papunta kay S. So, compute natin ha. Your consolidated net income most computation will be the same. Your UPEI and RPBI will be the same except that yung unrealized profit, sa realized profit, sa column ni seller mo nilalagay. So, sa column mo siya ni P Corporation as the seller ilagay. Ngayon, to compute for the consolidated net income attributable to parent, magbabago lang kasi nabago yung kay P Corporation, nawala ng share si NCI. Okay? That's it. Okay. Now, for the second part of our lecture is the intercompany sale of fixed assets. Same with inventory. Meron ka ding tinatawag na downstream, upstream. Tapos, ang pinakaiba lang pala nila, si inventory kasi kaya nagbibilihan si parent sa kasi subsidiary. It's with the ultimate purpose of selling it to outside or external customers. Pero, pagdating naman sa fixed assets, ginagamit kasi yan ng kung sino yung bumili. Kapag downstream, binili siya ng subsidiary, gagamitin siya ng subsidiary, so meron kang depreciation. Pag upstream, binili siya ni parent, so merong depreciation si parent doon. Dapat matanggal din yan, yung mga intercompany, sabi ni PFRS 10. Tapos, again, same with inventories, ang pinakaiba nila kapag upstream, si NCI, meron siyang share sa elimination. Let's compute. Okay. Your gain or loss on sale, ang entry mo, kunwari nagbenta si parent, ang selling price niya ay 100, papunta kay subsidiary 100, tapos yung carrying amount ng fixed asset na binenta niya, merong cost na 110 and accumulated depreciation of 35. Your gain or loss on sale is computed as the selling price yung 100 na cash. Tapos book value is cost na 110 minus 35 na ACDEP. So, meron kang book value or carrying amount na 75, meron kang gain on sale na 25. Sa libro naman ni subsidiary, ang entry mo dyan, kung magkano mo binili, debit fixed assets, credit cash 100. So, I just use the fixed asset account kasi pwede yung PPE, pwedeng investment property, pwedeng other asset. So, generic na lang, fixed assets. And then, kapag, syempre, ang gumagamit na yan, si subsidiary. So, assuming you have 5 years remaining useful life, straight line depreciation, so your entry for the depreciation ni subsidiary will be debit depreciation expense 20, which is 100 minus 5. Credit accumulated depreciation 20. Your elimination should be dapat matanggal again yung lipatan na nangyari, di ba? As if dapat walang nangyari. So, tanggalin mo yung gain or loss on sale, or yung gain to kasi credit. Yung gain ni parent, tanggalin mo, so i-debit mo siya. Credit mo siya sa fixed assets. Kasi dapat yung carrying amount ng fixed asset as of acquisition date, as of transfer date, dapat 75 lang eh. Pero ni-record siya ng subsidiary na 100. So, bawasan mo siya ng 25. In addition, kung si parent kasi ang nagde-depreciate niyan, dapat ang depreciation niyan is 75 divided by 5 years. So, that will be, kung ilan man yon. Pero sa subsidiary, ang naging depreciation niya ay 100 divided by 5 years. So, that is 20. So, meron kang sobrang depreciation kasi sobra yung naging cost mo. So, tanggalin mo yon. It's either, i-compute mo yung depreciation ni parent, saka compute mo yung depreciation ni subsidiary, any difference, i-eliminate mo. Or, pwede din naman, yung gain or loss mo kanina, yung 25, if straight line depreciation ka. Yung gain or loss mo kanina na 25, i-divide mo lang siya sa remaining useful life na 5. So, meron kang 5 na pabawas sa depreciation. Okay? Okay, third problem, intercompany sale of fixed assets. Fixed assets naman tayo ngayon. The question is, what is the consolidated net income attributable to parent in 2018? So, yung equipment or computer to eh. Yung computer, originally, binili siya ni S Company in 2016. Tapos, binenta niya in 2018 to P Company. PMN Corporation, so rather. To the Okay. So, solution to compute for the consolidated net income in 2018, that will be net income given by, given the 85,000 and 45,000. Or, ito din yung income from own operation. So, kung may dividends na given, wag mo nang i-plus minus dyan kasi own operations na siya. So, gain on sale, ayun, given din. Nasa entry naman ni parent company, 15,000. Meron kang depreciation na 15,000, which is the gain on sale divided by the remaining useful life na 3 years. Paano na-compute yung 3 years? Kasi expected life talaga ng computer is 5 years. Ginamit na ni S Company for 2 years. So, natitira niya 3 years. So, your consolidated net income is computed as 85 plus 35, 120. Your consolidated net income attributable to parent is 85, buong kay parent, plus the subsidiary na 35 times 60%, that's 106,000. So, ganun din kapag ano naman to, kasi ang seller dito si S Company eh. What if ang seller naman is CP Corporation? Lipat mo lang din yung gain on sale saka yung depreciation, lipat mo siya sa portion ni P Corporation. Okay? So that's it. If you have questions, please do let me know. Thank you!